Good evening. Ira Epstein, and here we are with your Spider ETF stock market wrap-up for the first day of spring, March 20th, 2023. All right, we're not through with this whole banking issue. Now, in all fairness, Europe came to the rescue. UBS ended up buying Credit Suisse. They started off with a $1 billion bid. They ended up paying $3 billion. But with all the guarantees they're getting and the backouts and other things, we're not quite certain what the deal's really worth, other than they've got their hands full. And if I were them, I'd be spinning things off as fast as I can get my arm around them to get down to the business that you're comfortable with and dump the rest of it. That simple. Are there good deals in there? Of course there's some good deals in there, and that's why they were able to get this. They didn't go after it. It was forced on them. You know the Swiss National Bank, the government of Switzerland, they're all forcing this on that bank. We'll see what happens. Now, I keep reading, about us. And the more I thought about it over the weekend, I'm going, not every bank in America is in trouble. That's number one. Number two, the ones that are in trouble, what kind of banks were they? Were they mismanaged at all? And why are we throwing so much money at FRC? So I decided I'm going to cover FRC on a chart tonight, and we'll take a look at that. And then I'm going to revisit Schwab, and then we'll go into some other parts. But before I do that, it costs you nothing to hit that little button on this YouTube page and give me a thumbs up if you like what I do. I appreciate it. All right. A lot of green behind us today, a relief bounce. Two-day FOMC meeting beginning tomorrow, culminating with the FOMC announcement. Then we get the Swiss National Bank and the Bank of England. It's 50-50 which way the Bank of England will go. As of today, you're about a 70% probability that you're going to get a 25 basis point hike by the Fed. I'd be very surprised, and I think it would be a real shocker if the Fed doesn't go the 25 points. It sends a real worry message to me. However, what I do think they're going to do is they can be talking very dovish at the meeting. That's what you got to keep your eye on, just how dovish. If they're real data dependent, he's got to mix that in some way to counter the dovishness that I think he's going to cover there. He's got to say, the data allowing this is what it is. We realize there's some frailties, blah, blah, blah. So when we take a look at First Republic, let's understand where this was. In February, I'm not going way back here. This was a $140 stock. The stock price on the close today lost another 47% just today alone. It's down to $10.85. So I have to be asking myself, with the $30 billion just promised to them via the consortium of banks in America throwing it there, why are we doing that? There is something real wrong. Other people are seeing a big problem here. Why are we saving this bank? Wouldn't it be a better takeover in some manner if the business is good? I don't know. I don't see anybody throwing capital at them. I see them throwing deposits at them. And as I said, that's got to be something to do with the reserve ratios that they've got to have in place, and it keeps them at a certain point. When we take a look at the swing line, it's been bearish. Lower highs, lower lows, but it's been bearish a long time. It got bearish up here. I don't think anybody thought this was happening. At the beginning of February, this market started turning. And when you look at moving averages, they're lined up in a classic bear. You have the short-term average, the 18 under the 100, the 100 under the 200. In mid-February, not down here, in mid-February, you started getting your first right through here, the crossover with the 18. And when it crossed the 100, all heck broke loose in this market. And it just went down like a toilet goes. Look at the Bollinger Band. Even with the panic, you had just a few days, 4 or 5 days under, you push to the right, and now you're coming to the other side. This is a problem for the market. All right, you'll have an idea that there's some stability coming in if and when you can take out the highs of Friday. Now, that's going to require it over 2001, so just keep that in the back of your eye there. But what do you have? You have an embedded reading. Until that red line closes over 21, watch out. Can you go lower? You can go to 0. So you've got to be careful in this. There's nothing yet that is saying on this chart, do anything in a positive notion. You had an outside day up one day, you took out that low, and when that occurs, you normally make a run for the closest moving average or a Bollinger Band. I'm fearful that Bollinger Band, look at that number. It's real scary. It's $1.50. I thought it was a misprint. I checked it. It's $1.50. Not saying it has to go there, but if it's worthless, whoa. What about Schwab? We had that big break. Market went sideways. It had an embedded reading. It lost it, and it hasn't been able to go anywhere since then. Normally, quickly, you get price in the 18-day average when you lose the reading to come together. The longer it goes, the more this average gets a chance to fall. This is not good for the banks. That's still not very good action at all. And if the market starts breaking through everything, watch out here. That would be the sign, if you get through that low, that you're not going to go up to that 18-day average anytime soon. I don't think that's happening, but I'd be very disappointed that this is the bounce from a stock that was just pushing up here $80, and you're stuck with a 40% decline, and it's not even bouncing, and banks are supposedly looking better right now. In the gasoline fund, look for resistance back up over there. It is spring. The window's opening as to when we might start seeing traders start to deploy and say, I want to own some gasoline for that time frame. This chart pattern's not there yet, nowhere near it. You're still in a full-fledged bear pattern that overdid itself right here, got under the Bollinger Band, and is now pushing up, but it's got layers to fight with. And that 58.22 to 26 is going to be a big area of resistance. In Tesla, as I look at this, the resistance point is the 18-day average of closes. Now, so far, this is a bear market rally. Why? Because as long as you stay under the 18-day average, our filter is to the downside. When the market closes under an 18-day average, the bias is down. If you get rallies like this within it, I call it a rally within a bear market, and that's exactly what we're getting. In XLF, the financial services, well, they're not bouncing either. So I'm looking at the two stocks we saw, the banks. I'm looking at this. I don't know. I realize everybody today feels better, and there's a lot of green on the board, and stock indices are up. But the deeper I'm diving into this, I'm not getting comfortable. In XLI, the industrial service. So how are you going to pick up industry if the banks do this? The banks are scared right now. What banker in their right mind isn't concerned about all that's going around them? You're going to go into your mid-sized bank because you're a medium to a small-sized company, and you need a loan. You do realize what this man's thinking. I don't know if I want to make any loans right now. You could be the greatest guy in the world, and you've always been good, but he's scared. That can hurt the economy. So you've got to be careful with what's going on there. In SOX, the semiconductor, you're into a lot of resistance, the upper Bollinger Band. This has been a real good play. The tech sector's come alive because interest rates have fallen. Some people think that was it. We've seen the peak. Other people don't think that is the peak. They think the Fed has to continue on with this. There's your battle. You're in a big one. But tech loves lower interest rates. Remember that. When we get to the home builders, well, we're going to start getting more and more numbers now, but they're not getting the big bounce. And we've just seen interest rates fall sharply. In my full research report tonight, I put a link in so that people can go on and look at the rates during the day, real rates. So I wanted them to look at that. I've been looking at the mortgages. They reset typically around Thursday. That's the day that you get your biggest resets that I see. And we'll see what they do. They should be coming down. But we're not getting this bounce. So we really need to get this market over 66.25 to break the pattern of lower highs. We're starting to get higher lows already, and you're oversold. So you're in a pause for the moment. If the bank stocks get hurt again, that should get hurt too, that particular ETF. XLE, the energy. So now traders are trying to say, what do you do if everything slows down? If the U.S. were to go into a hard recession, how could energy prices hold up is one of the big questions we're all asking. We already saw that Goldman Sachs has now lowered its 2023, 2024 price targets on the upside. They're now under $100 a barrel, not by a lot, but under $100 a barrel. We've yet to see what the Saudis are going to say. You know, this is not the targets that they wanted in the $60 and $70 a barrel area. In the gold market, this has got its play. I mean, this is a real thing. You have a world crisis in banking. Gold has stepped up and it has held. It didn't go to the altar and disappoint this time. Yes, it could break from here at any point, but it doesn't have to. It is proving to be the safe haven, and traders have gone to the yen, and traders have gone to Ethereum, and traders have gone to Bitcoin. So they have gone to certain areas. Now, today they started backing off of the bonds and notes. Yield started to climb a little bit going into the 2-day FOMC meeting. Silver's been pulled along. It's no longer in the bear camp. It's in the bull camp and overbought. That came alive. Copper's trying to come up here. The first resistance should be on the way up now. The 100-day average, when it got under it, it made a run to the lower Bollinger Band and very close to the 200-week. So I'm going to assume between here and the 18 is going to be the resistance point in the copper market. It's refusing to embed, so it's just plain an oversold market. In TLT, the first challenge of the 200-day average in gray, and in the black, the Bollinger Band. That's generally where markets on the first challenge stop. So on the way up, that would be it, and on the way down, if that were the thing, it would be there. You actually tried to do that right here, and then you paused in between the Bollinger Band and the 100-day average before resuming the uptrend. Did we get too high? Are rates going to go back up? Well, if so, and if the Fed isn't in a pause, this is way too high, in my opinion. That's what we have to wait and see. Now the dollar. Many traders believe that we are getting closer and closer to the pause in America. Too many banks, got to watch them. Fed's going to back off for whatever reason. Maybe 2% is a number that's a target for inflation that you don't have to hit right now. It's going to be a little bit later. I can give you all the stories, but I can tell you this. A pause right now probably sends the dollar a lot lower. That dollar a lot lower, again, what does that do for the inflation story? That becomes the problem. You've got lower highs, lower lows. You're coming into support and you're oversold. I think this is going to be an exceptionally tricky time over the next couple of days as we get all these banks trying to decide what to do. Think of the Swiss National Bank. They saw the European Bank go 50 basis points. Their biggest banks now had emerged. They have one big bank left. Do they dare not go the 50 points to match? I think that they're in a rock and a hard place. I think they have to go. In FXE, back and forth here. But now you've got either a base or a top of importance that's been built. The fact that we held nicely the 100-day average when we're back up here, I lean to the bull side in this particular market. So you put it all together, you try to come up with game plans, and that's what I do with you. So if you'd like to join me in the morning, where I love to get you, at 9 o'clock I record and cover 40 different charts. I'm rotating them all the time. And that is where I say, buy here, sell there, put your stop here. This is what to do, right or wrong. The reason is you have to have a user ID and password. The government doesn't allow me to go up and do this in these reports. That is not what I can do here. Where I do, it's the other. A lot of you ask me that. And I cover, you'll want the VIX, you want the other things. They're all there, I promise you. So open your wallet a little bit and join me. It's not expensive, I promise you. You're spending more on your coffee during the week than this costs. So how do you do that? Just go to our website, iraepstein.com. Join me in the research area. It's that simple. There's a link up here. Give it a click, and away you go. I'm Ira. You have a great day.